Thursday, the 17th day in the month of August 2023. And since it's 10 a.m., it's time for Business Morning. Welcome to 55 minutes of current and relevant business conversations. It only happens here on Business Morning on Channels Television. I'm Ini John Mekwa. Let's start off now with what's going on in the grain space. We can tell you that Chicago soybeans climbed during Asian trading on Thursday, extending gains from the previous session as uncertainty about the size of the upcoming U.S. harvest and concerns over tight domestic supply supported prices. Corn and wheat were slightly lower ahead of the U.S. weekly export sales report, which is set to be released later on today. The most active soybean contracts on the Chicago Board of Trade was up 0.5% at $13.29 for 3/4 of a bushel. Expected dry weather conditions early in the growing season would mean smaller soybean harvest this fall. Traders are awaiting the U.S. Department of Agriculture, USDA's weekly export sales data, with analysts expecting sales of 0 to 400,000 metric tons for the 2022-2023 and 550,000 to 1.3 million metric tons for the 2023-2024 season. To the oil space now, our Malaysian palm oil futures slipped after hitting a 12-day high in the previous session. But the contract was range-bound as a decline in ringgit supported sentiment. The benchmark palm oil contract for November delivery on the Bursa Malaysia Derivatives Exchange lost 3 ringgit to 3,843 ringgit. That's about $827 a metric ton in early trade. The ringgit, which is the palm's currency of trade, fell 0.37% against the dollar, turning the commodity cheaper for buyers holding foreign currency. Dalian's most active soy oil contract rose 0.3%, while its palm oil contract gained 0.3%. Soy oil prices on the Chicago Board of Trade went up 0.8%. Crude oil now prices were choppy on Thursday after falling over the past 3 sessions, with the undertone grim on the worries that slowing growth in China and possible further U.S. interest rate hikes will weaken fuel demand in the world's 2 biggest economies. Brent crude futures were flat at $83.45 a barrel after initially falling 0.5%. U.S. West Texas Intermediate crude was down 8 cents at $79.30 a barrel. Traders will closely watch Chinese economic data and government policy moves, in addition to U.S. oil inventory data, as oil producers in the country could start increasing output to gain market share amid production cuts by OPEC Plus group. In China, missed payments on investment products by a leading Chinese trust firm and a fall in home prices have added to worries that its deepening property crisis is stifling what little momentum the economy had left. Minutes of the U.S. Federal Reserve's July meeting released yesterday, Wednesday, also weighed on oil prices, as they show that the central bank's officials did not give strong indications about pausing rate hikes as they continue to prioritize the battle against inflation. And back here in Nigeria, the Nigeria Extractive Industries Transparency Initiative, NNPCL, says Nigeria lost 16.25 trillion naira to crude oil theft and sabotage of crude assets between 2009 and 2023 as a result of the loss of over 619.7 million barrels of crude within this period. The Executive Secretary of NNPCL, Mr. Bunaya Oji, who revealed this at a multi-stakeholders roundtable on the approval of agency's 2022 industry report, also stated that Nigeria spent 13.7 trillion naira on subsidy payment between 2005 and 2021.
I can go.
The EITR standard, which provides guidance to operations, requires that approval of this report a report like this should be done by the MSG, globally called the Multi-Stakeholders Group, but in Nigeria it's called the National Stakeholders Working Group. But unfortunately, in June this year, our government dissolved all federal boards. For the solid minerals sector, this report covers the activities of 1,214 companies and 3 government agencies covered in the solid minerals sector. The objective of the report is to establish quantities of minerals produced during this period, 2021, quantities utilized in the country, and quantities also exported. The report also sought to establish the revenues paid by companies, oil, gas, and mining companies during the period, how much of those revenues actually entered into government coffers, and how and if those companies paid what they should pay, and if government received what they should receive. So your duty today is to be taking around this report, which our firm of consultants will do, and then you consider, make your comments, final comments, consider, and then approve the report to enable us release this report at a later date.
Well, the issue of oil thefts is a very important one that requires deliberate effort by the government, and thank God we now have portfolios attached to the ministers, even though we did not see that of the Minister of Petroleum. But of course we saw that the ministry has been split into 2, so we have the ministry in charge of gas now, and then we have Minister of State, you know, for petroleum resources. Perhaps the president, which has been the practice for how many administrations now, at least the last 3 administrations, we've seen the president act as the Minister of Petroleum Resources. Perhaps that's what President Tinubu intends to do, but we are yet to get a confirmation on that. And still connected to that, yesterday, I think it came in late, the story that the NNPCL has secured $3 billion oil for cash loan, and it's all in the bid to help, and they're doing this on behalf of the federal government. That's the report that we got yesterday, and they're doing this to stabilize the naira and help buffer some of the price hike or threats to price hike when it comes to petrol. But let's try to understand more about this. I know that the NNPCL has been sharing on Twitter some tips of what we should know or understand about this deal. But let's try to put that in words and a whole lot more with partner oil and gas with Olaniwo Ajayi. Mr. Chukwemeka Osuji joins us from England. Mr. Osuji, thank you for your time and good morning.
Good morning. Thank you very much.
Yeah. So I believe one of the things that come out from this is that it's a $3 billion loan, and it's going to be paid for with crude, unlike the crude swap we used to have, which is that they will give crude and get refined products from it. But in this case, they're giving crude worth 3 billion naira, and we understand this is going to be given in tranches. So help us to understand some of the other implications. I know they say it's to stabilize the naira, but I mean, the man out there might just ask how. So help us to understand some of these technicalities about this 3 billion naira loan.
Thank you very much. What I'll do is I'll break it up into 2 bits very quickly. In the first, I'll speak about how this works based on the oil industry practice. And then I'll then speak about what the implications are for the Forex, which really is the objective. So in the oil sector, this practice is not strange, it's not alien. Typically, oil producers may require funding for either immediate developmental needs or future developmental needs. And they may decide not to use their own funding or to even take cash from elsewhere, but to secure funding for that they need for the operations. When they do so, there are different models. They can either pay back from their cash flow or they can pay back from production from the assets. Now, as is the case in this instance, they can also pay back from future production from the assets. It could either be part of their profit oil or royalty oil. And in this case, I think royalty oil was mentioned as part of the elements that will be involved in this deal. So it's not a strange concept. And like I said again, so it's typical. You will secure loans to be received immediately or in tranches. And then you will then pledge or securitize production from new assets to repay those loans in the future. Now, as to this application, we all aware of what's going on in the forex, in sort of the sector, and how government is sort of struggling to support the CBN. A week or so ago, when the CBN report came out about our reserves, there was a bit of murmurs in this sector, and we saw the impact on the market. So I think the essence of this move, amongst other things, is to get additional revenue that the government can then use to support the CBN and then support our reserves. When we support our reserves, we will send positive signals to the economy and the sector generally. Then in addition to that, there will then be additional cash flow. So I think that's the linkage between the production on the part of NNPCL, securitizing its reserves for production, as well as getting immediate cash flow to the government.
How long can we expect? Because it's supposed to stabilize the naira, and all of that. How long can we expect before we start seeing the impacts of this?
Okay, two things that you notice will immediately happen is when firm definitive documents are signed, the market begins to react immediately. On the back of this news, I'm sure if you've been monitoring, particularly the parallel markets rebounded since, I think, Wednesday, and I think that we are looking at a positive note again today, just on the back of these announcements. Now, in terms of the funds coming in, we are aware they've signed the term sheets and the commitment letters. It might not be the case that they will fund or disburse monies to NNPCL on the back of a term sheet. There may be more definitive agreements signed, in which instance, that means that the money is not coming immediately, because it might not be the case that they're disbursing on the back of the term sheets. Whatever the case, whenever they disburse, the funds will come in. And immediately we begin to think that the markets will begin to react positively. Again, as I said, on the back of the news alone, the markets will take signaling and also react positively.
Yeah,
so I think we'll see a little bit of a stop in the downward spiral of the value of the naira.
Yeah, you're correct about that, because yesterday in the parallel markets, the naira gained was back to 800, about 890, left the 900 and 915 and all of that it was. So I guess the news has already started doing something. But of course, over time, if we do not see feel it, then, it will be back to normal, which is what happens in markets. But there's the other side, the fear that this will be on the balance sheet of the NNPCL, and NNPCL is supposed to go private. This may scare away investors, from buying into a company that maybe has so much debt burden.
Oh, well, there are two things. First and foremost, I think to some extent, we need to begin to trust those that are managing certain organizations to give them the facts that are available to them, some of which we may be unaware, take what is likely to be the best business decisions in the interest of the company at the time. And again, as I said at the beginning, financing through these models is not very alien. And all you're pretty much doing is you're securing funding on the back of future production. To the extent to which you have enough reserves to produce, then it's pretty much a plug and play. As long as you produce, you can pay back. It should not be a problem. And then in the future, you can always refinance these facilities, which is source for other avenues to sort of repay or reduce or restructure the financing. So there's a whole lot of flexibility that can be done just before or at the time at which the company decides to float some of its shares to the market.
But do you see this as a long-term? Will this give us, is it just a buffer for a short term, or is it a long-term solution?
Speaking personally, I think it's a buffer for the short term, or I would just call it one of the many measures that might be required. I think ultimately, as I've said in various other fora, it's really about the value of the naira. The value of the naira is tied to the value of the economy, whether you're producing or not, amongst other things. In addition to that, in terms of your balance of trade, to the extent to which Nigeria is not producing enough or exporting enough, and most of your trades are settled in dollars and not in naira, the naira will continue to be weak. So this is just one of the measures. Ultimately, we need to do more to strengthen the economy generally, and more importantly, manufacturing and production needs to ramp up significantly. Then we begin to see the value.
All right, thank you so much for your time, Mr. Chukwemeka Osuji, partner oil and gas, Olaniwo Ajayi. Thank you for your time this morning.
Thank you very much. Thanks for having me.
We'll certainly have more to say on this in the commodities segment, but we'll take a break and we'll be back for that. All right, after that, we are still on this NNPCL $3 billion, and this time we're doing it with Bolanle Agbaje, Senior Analyst with Financial Derivatives Company.
Hi.
Good morning, Bolanle. Good to have you.
Good morning. Thanks for having me.
So have you had your own sigh of relief with this $3 billion?
Sigh of relief? No. It just seems like we're running around in circles with this kind of initiative. It's just, chasing gains in the exchange rate market in the short term. And we don't see it, actually stabilizing, the exchange rates in the medium to long term. You're just, selling oil that you're going to pay for in the next few months, and that doesn't necessarily solve the problem. What happens to increasing, bringing in new money into the system, creating an interest rate, or making sure that you're not just increasing the MPR rate, you're actually increasing effective interest rates to attract, that hot money flow into the country.
Perhaps that's the long plan, the long-term plan. This is just for now. Yes,
it's just for now, but ideally we can start moving towards, increasing or creating policies for the long-term plan now, as opposed to, the NNPC borrowing even more money.
Maybe with the ministers on board now with their portfolios, we can expect to see.
It's great that, we've signed off on this, and we have the ministers' portfolios signed off and all of that. But at the same time, you're just bringing in people into the system. We need to see ideas from those people. We need to see actions from those people. I hope they are good people in actual fact, but just having people in the ministerial, government is not going to solve the problem. What ideas are these people bringing in? So we can be happy now that we've signed off on that and we can actually move forward, but we're expecting to see, new, fresh ideas that would reallocate resources.
Are you excited about this splitting of the oil and gas sector, where you have gas
it might increase efficiency when you split it like that, because it means each minister can actually focus on the nitty-gritty of, each aspect of the economy and reallocate resources efficiently while trying to increase productivity in the long run. So I guess it might be a good idea, although it's increasing cost for us. But hopefully,
because we're talking of reducing cost of governance.
Exactly. But what this means is I hope the costs would actually create trade-off or positive trade-offs in the long run by, creating such good ideas that would move the country forward. So the NNPC's initiative is nice. Obviously, we've seen appreciation in the exchange rate market, but I can tell you that
it's going to last.
It's not going to last, yes.
That's so unlike you. You're always very optimistic.
No, but this it's just plain as day in the books. It's definitely something whereby by the time they would have to keep doing this to create that buzz in the market, and we can't keep doing that.
Because that means we're trading our future.
Exactly.
I mean, even the oil we're promising to pay this $3 billion is the future.
Exactly. And what about our oil production? Currently, our oil production is at about 1 million barrels per day. Although we've seen that Forcados terminal has, started again, and I think there was a shutdown last month because of maintenance issues, and that has started again, and it kind of contributes about 220,000 barrels per day. So we hope that by the time this is added to the 1 million barrels,
I don't know if you saw the report from NNPCL about how much we lost to oil theft.
Exactly. So that hasn't even been, and we've been talking about oil theft for the past few years now, and it's still not, being addressed. So why are we focusing on creating or increasing our loans rather than, solving such issues in the short term?
Perhaps because it's on NNPCL's balance sheet now. It's not. One of our guests, I think on Monday also did say that we were talking about inflation, and what he says is our situation shouldn't be this gloomy if we can only deal with the inefficiencies. A lot of the things we are looking at or we are feeling is paying for inefficiency. Imagine like the oil theft. If Nigeria did not have, even if we had oil theft, but not in this volume,
yes, it wouldn't.
Then we would not feel this. I mean, when global oil prices is surging, we still cannot boast of any gains.
Exactly. And in a situation where you have high inflation rates, but you're seeing the economy grow, it will pinch less than a situation where you have so many inefficiencies in the economy and coupled with high inflation rates, coupled with no plans that, you know, we can actually see the benefits of that in the short to medium term. So it's a very peculiar situation for Nigeria.
And we see gas prices down now, even though we're told that cooking gas is going to shoot up.
I think the reason for the fact that it's down now is because you're not seeing the demand pick up as much as, you know, what people expected. And also there are other alternatives in the market that most individuals are resorting to. But although gas prices had increased compared to the drop that we had seen, you know, in the few months, I think we actually discussed this on the program when the prices actually declined. So it has increased.
I didn't really see its effect, at least in my cooking gas area. I did not see it.
Some people did. I did. I felt, yes, I felt the effect of that.
I'm living in the wrong area.
But all in all, I guess there's that push and pull from the demand side that is restricting the prices to go to about, you know, the highs that we had seen, you know, last year. So that's good for us. And obviously, most people have cut their budget significantly. You know, their food budget, their, you know, looking for other alternatives to consumption because of the high inflation environments that we currently
So now that we have Mr. Ekperekpe as the Minister of Gas, and we're talking about CNG for our vehicles, for electricity.
Oh, that is
we do expect a lot from him. I hope he knows what he's getting into.
We do, but if I'm going to be very honest, when it comes to, you know, those kind of alternatives, because even when you look at the West, it's still something ongoing and it's taking them years. You travel abroad, you only see a few electric cars. Those are not, it's not a situation where electric cars have taken over, you know. So imagine Nigeria where we haven't even started. So we have to be blunt when it comes to
let's manage our expectations.
Manage our expectations and focus on, you know, what we can actually solve. So the oil theft is a very, you know, good example of what we can actually solve right now in terms of boosting production and obviously increasing, you know, productivity in other aspects of the economy. So other agricultural products that we have, you know, a comparative advantage in. That's what we can do now. When it comes to revolutionizing, it could take some time.
We believe in Nigeria. We believe in our government.
I do believe in it, but I think what this has taught me is to be extremely realistic about, you know, what Nigeria can achieve at the moment.
Yeah, because these are things that I think the last guest did say that we should learn to trust the government. I mean, gaining trust that has
lack
been broken.
of confidence, a significant lack of confidence in the government at the moment.
Yes.
So it's not the time to, you know, claim promises that, you know, seem like it can't be achieved. Let's focus on what we have and improving what we have now to gain that consumer confidence back within Nigeria. I think that's where the government should, you know, focus on.
I guess the ministers need to hear that before they start making
I'm excited to see, you know, what each minister is ready to, you know, the ideas, and not just even creating the ideas, because we're very good at that. Implementation and changes, just something fresh and new.
I'm excited about the blue economy. I mean, I know that stakeholders in that industry have been asking for it for a while now. So now that they have a minister, let's see what will happen to our fisheries, our waters. They're not lumped with transport, and they won't say, oh, they didn't have attention or something. You know, I'm very excited about that. So
it's just time to, you know, it's good that we've gone ahead, we've gone forward, we've selected who the ministers are. So it's right now crack time to, you know, give us what we've been asking for.
My only concern when it comes to that is you see a lot of them, it doesn't seem like it's their area of expertise. So we hope they won't have to need time to start getting used to that before they start getting ideas.
So I want to believe that they had done their due diligence in terms of knowing who to put in which particular position, because we don't have time for that. We don't have time for any minister to start learning what they should, you know, be doing. And obviously, I'm sure their subordinates that are obviously still within the system, that
like the permanent secretaries.
Exactly, that would, you know, take things forward. But just because we aren't seeing their expertise in that area doesn't mean that they don't have it. So it would be nice to, you know.
Yeah, the president must have a reason for putting them.
So like I said, that confidence and that trust,
is what they need to build.
Exactly.
All right, let's see what else is happening in the commodity space.
Right now, cocoa has been great. We're seeing still increases in prices of cocoa. So we're trying
no increase in our output, though.
No increase in our our output, but I guess we should obviously accept the fact that there's no decline in our output at the moment. So that's great for us, and we can still, get the forex that we need from that. Although with oil prices are still at about $85 per barrel. We had seen a significant drawdown in U.S. inventory, and although that hasn't really pushed oil prices so high, that's just because of the drawdown we're seeing in China. China is showing signs that it's not able to meet its growth target, and everyone is concerned about that.
A firm or a couple of firms are not able to meet up with their obligations.
Exactly. So that obviously is bringing an issue, because everyone focused on China to boost that, oil demand. And if China is not able to meet that 5% that, that is their target, it's bad for the industry,
Bad for the world.
Bad for the world.
All right, thank you so much, Bolanle Agbaje, Senior Analyst in Financial Derivatives.
Thank you for
your time.
Thank you.
All right, then let's take another break. When we come back, another conversation for you, find out what it's about. In all of our conversations, it will not look good or real if we do not include the MSMEs, the small businesses, the bedrock of the nation's rail sector. How do we get them to work well? Well, a major challenge with them, we know, is the issue of funding, capital, and also financial inclusion. Well, to discuss this is Mr. Adesina Adewumi. He's the Chief Executive Officer of Trade Lender. He joins us here in the studio. Mr. Adewumi, good morning. Thank you for your time.
Good morning. Good to be here.
Would you say we are giving enough recognition to the MSMEs? We talk about them every week on this show. Do they have enough attention? They cover more than 90% of employment in the country.
I'm very excited about that statistics. I think we are not paying great attention to them, especially in terms of helping them to be able to build capacity, to scale, and also to be able to create the meaningful jobs that we want for our economy.
So when we talk about financial inclusion or access to capital, we know that a major source would be loans. But sometimes these small businesses find it difficult to meet up with the requirement, for loans. How can we make it better for them?
I think, first of all, the existing systems, and policies have made it quite difficult for these MSMEs who are just, boggling up to be able to meet up with these requirements. And this is why, the opportunity has also been created for digital banks who are able to understand and also use technology to help these small businesses to be able to access these loans easily. For me, I think the right step is first on the policy side, making some tweaks as regards to
What tweaks?
For example, the traditional banks, are legally required to actually give out these loans to people in specific sectors. But today, they are actually not doing that. It means that nobody is actually implementing and checking if they are actually giving those loans. And those policies need to be very strict on the specific categorization of SMEs that actually get it. Because when you talk about SMEs, is small, medium, and also can also be large. So most people who have been getting these loans are actually people who are on the higher scale, who can meet certain criteria like collateralization and several others, which the main people creating the bulk of the jobs, the informal sector, are actually not able to meet up with.
So we have microfinance banks that are supposed to, meet up with their needs and all of that. Aren't they enough?
Okay, just to give context, we have today over $29 billion in terms of a market for these SMEs who are currently excluded from inclusion, financial inclusion. So you can imagine what this microfinance bank, who today don't leverage on any technology, especially those big ones who are at national level, are actually facing. It means that they can actually reach out to a very small portion of these small businesses. And this is where the digital banks come in. You can call them digital lenders, you can call them digital banks, but there is actually a high need for the government, the legacy banks, to be able to work with the digital banks so that they can actually promote and also deepen financial inclusion for those at the grassroots.
Yeah, when you mentioned digital banks, all I remember is those text messages and all of that. Because I think the issue of collateral also is important. Those digital lenders, because they don't ask for collaterals, they take some aggressive steps to get their money back. You know, meanwhile, the traditional banks will ask for collateral. Where do you see a compromise? Should I say a convenient compromise for both parties?
Okay, so today what most of these digital banks do is actually to be able to do a reverse collateral. So why give a small business owner who actually just needs inventory, cash, when you can actually pay to the supplier to actually provide that inventory? What that actually removes is the risk of diversion. This is actually some of the steps that digital banks like us and several others have taken to be able to remove the issues around diversion and also need to actually ask for an upfront collateral. The banks today will still ask for collateral, which these guys cannot meet up with. And again, the banks are still leveraging on paper. Most of the banks are leveraging on paper. The digital lenders, while we understand that there are some loan sharks who are not ethical in their approach to recovery of funds, but most of those who have been approved by the FCCPC, there are about 167 names and lists, today, if you check their website, who are legally, stamped to be able to support these small businesses. What they do is they have been able to, create systems that helps them to be able to identify all in one platform, either the credit history, what they want to use the funds to, and also partner with the right people who can guarantee these guys and also provide inventory or various forms of assets, in place of giving them cash. So for example, a small business owner in the Drew Mortar market who perhaps needs a deep freezer to be able to grow and scale a business, instead of giving her cash, you can work with various partners, finance that on their behalf once you can qualify that they don't have a bad credit history, so that they can get that deep freezer to be able to grow.
But that also puts another burden on you. After you have helped that trader to get that deep freezer, you have to stay on that trader to ensure, that when they have 1,000 naira, they drop it. When they have 2,000 naira, when they have 500 naira, if not, it can still get diverted.
Yes,
so that's extra staff, extra operating costs for you.
I don't quite agree. The beauty of it is digitization and technology has made all those processes quite easy. Today, most of the digital banks and the digital lenders have actually created a system that domiciliation is actually in their position, meaning that there's a wallet account which these small business owners have to be able to transact through and receive their payment. Before now, the cashless, economy, we have a whole lot of people receiving cash. But today, we have a whole lot of people who have also adopted the use of technology by being able to transfer. I think it's quite a significant move. While, the process wasn't quite easy for us as a people, but I think that was a very, significant shift to move people from the cultural, norms to actually embracing digital systems to be able to make payment. And now the digital banks can track their transaction history and also recover back their funds.
Yeah, talking about making lemonade from lime. Thank you so much for your time. Yeah. Mr. Adesina Adewumi, co-founder and chief executive officer of Trade Lender.
Thank you very much.
All right, so there you go. At least a little bit of good news will help us smile. It's good to know that there's now an avenue for the small businesses, the really small ones, to get maybe not the cash, but the inventories that they need to run their businesses. And then there's a way to track and follow up with them to ensure that they also retrieve. Well, let's see what the market, I know what the NGX closed with yesterday. A bit confusing for me, actually. Will is here. Will, I mean, we're talking about it when the figures came out yesterday.
Yes.
I mean, I can't remember the last time where the all-share index is negative and the market cap is positive. And that was like, what's going on here? Is
moving in opposite directions. Yeah. That was quite like, something rare, something new, but it does happen from what analysts have said.
Yeah, that the MTN did that.
Commercial paper
it's a
listing.
New
listing into the market, so that actually boosted that market cap.
Yeah.
It's away from the all-share because it's the commercial papers that was listed yesterday, so on the NGX, so we did see that jump for the market cap yesterday. So that's why we see that differential.
Distortion between both.
The distortion is more like in opposite direction, and it's
It's just a wide gap. The disparity is quite wide, 0.47%, down for the all-share index, and marginal growth uptick for the market cap. So, and good news also, we did see NASD yesterday admitting IPOA, that's a paint manufacturing company, into, you know, their
Congratulations, markets are getting bigger.
Yes, and so we did see also that boosted that counter, that the NSI yesterday was up in yesterday's
but
trading transaction.
Unfortunately, I still had to report a negative market yesterday.
Oh, well, that's you, but I'm looking very optimistic right now. So we did see the all-share index down yesterday in yesterday's trading session. It was due to, you know, profit-taking sell-offs. We saw losses in the markets. The all-share index is at 64,625 points. Market cap up yesterday, 0.04%. We did mention because of MTN, and that boosted that market. Now let's look at the activity for yesterday. We did see now, Airtel Africa actually drew back the market yesterday. It's not a lot that we see Airtel. It's not been moving a lot, but yesterday investors decided to just take profit. They decided to sell off, and we saw it closing at 1,250 naira from its open of 1,390 naira 90 kobo. That's a bummer for Airtel investors. Now, we saw the volume yesterday in the green to settle at 291.71 million units, value at 7.43 billion naira, and all transacted in 6,214 deals. Let's look at the sectors. We see banking down yesterday, and this was due to sell-offs in GTCO. We saw sell-offs in Access Bank, and despite gains in NNPCL Holdings and Zenith Bank. Also for the consumer goods index, we see that boost coming from Dangote Sugar and Boas Foods. Industrial goods sector, not a lot, closed flat in yesterday's trading session. Insurance was down yesterday due to losses we saw in NEM Insurance, Sunu Assurances, and despite gains in Universal Insurance. Oil and gas, Eternal Oil boosted that counter. Let's see top trades yesterday. We see GTCO topping that trade because of sell-offs yesterday. Universal Insurance, the gains, that propped that counter up. UBA down in yesterday's trading session. Now let's bring in Abdurrashid Momo, is equity trader at TLW Stockbrokers, to give us more insights. Good morning, Abdurrashid.
Good morning. Can you hear me?
I can hear you loud and clear.
Okay.
Now, Abdurrashid, just jump straight into MTN Nigeria CP listing yesterday of 100 million naira on the NGX. And we did see that opposite movement for the all-share index and the market cap. Is this, we're just talking with Ine, is this rare? How often do we see this in the market?
Once in a while. I think this is not the first time we are seeing such. I think, you know, it boils down to when a company gives you option, whether you want to collect dividend or you want to collect bonus. So it depends on the shareholder, what they want. And then at the end of the day, the ones that opt for the bonus will be the extra that will be listed on the floor of the exchange. I think that was what actually happened yesterday when I got a call that the index was down and the market cap was up. So I think that was what distorted the market yesterday, because the information on the MTN actually come in during time of trade. It actually came in after trading. So after investigation, we noticed that it was MTN that actually changed the market scenario yesterday, despite the fact that the market was down and the market cap was up.
Okay. Now, also, in your opinion, we've seen the ministerial appointments yesterday and the portfolios that were assigned to them. Do you think the appointment of the new Minister of Finance and coordinating Minister of the Economy, Mr. Wale Edun, who is an ex-investment banker, will cause a positive jolt for the market and bring in some spark that is much needed right now? Yesterday, we saw the sentiment report buy interest 13% and sell at 87%. Do you think this will shake up the market?
Definitely, but as we speak, the market is on the downside for now. You see, when we track the market in TLW, apart from the sentiments involved, we look at our algos, and what I can say that since the beginning of August, when the market, you know, I've always been an adage of the 66,000 points. 60,000 points was the all-time high of 2008, and the market has reached that peak. So breaking that trend is where we are going to have issues now. So from the beginning of August till date, you can see that the market has been trading between 64,000 points, about 65,000 points. So the market is range bound. Why the market is range bound? Because we need, like from the list of ministerials they've announced now, and market financials are going to hit the market soon. So that's what we are actually waiting for. And the good thing is that even if we see any drop, the drop is still not a threat, because the short-term support is about 64,000 points and the short-term resistance is about 65,400. So as long as the market is trending within that axis, I don't see any I don't see any fear for any investor. As I always tell people, when we're in the bull market, everybody makes money, but when we're in the range market, professionals make money, because what you just got to look at is you need to know your key support levels and your key resistance levels.
Okay.
And that's where you put in your entry and exit points. And the market has been following these trends in the beginning of August till date. There's no threat.
Okay.
Unless market breaks below that support, then I'll know that there's a threat.
Okay.
But so far, so good. The market is range bound.
Okay, so right now, no threat to the market, no fear. Investors should just still hold positions, keep their monies, keep their coins ready, and still keep on investing, because the market is still on that part of the bullish run. Thank you so much, Mr. Abdurrashid Momo, equity trader, TRW, stockbrokers, for sharing your perspective. So as I said, the market for the NASD was up in yesterday's trading session, 0.46%. So we are on a roll for the NASD. But let's see how the market closes.
No threat.
No threat. So let's see how the market closes today.
For a change. Thank you so much, Will. So let's head to London now and join with Juliana. Juliana, good morning. Well, yesterday you told us about that Bank of Ireland glitch, and some people cashing out on where they're not supposed to. Have they caught some of them now?
That's a good question. Good morning, Innie. But I've got to say, more than 36 hours since a video started circulating on social media from cities across Ireland of people queuing up at ATMs to take out money, we're still not clear about exactly what took place in the Bank of Ireland. They have issued an apology, and I suppose I should backtrack and explain what happened just in case anybody hasn't seen this story. Bank of Ireland, huge island in the island of Ireland, which is just across the Irish Sea. I believe on Monday afternoon they started having some issues with their online app, and then on Tuesday evening word went round that you were able, if you had zero funds in your account, to transfer €1,000 into another account and take the money out of the cash machine. And that's exactly what happened. It appears as if thousands of people decided to join the queues. At one point, I think the bosses called in the police to kind of man these ATMs to prevent people from accessing money. But I suppose at the moment we don't exactly know what is going to happen to people. They did issue an apology, and alongside the apology, the bank did say that, of course, if you have taken any money that doesn't belong to you, that money will be debited. And for some people, they may think, well, I won't have €1,000 in my account, that's it. But it could be more serious than that. You are unlikely to go to prison. But then, of course, this could negatively affect your credit score, and in the United Kingdom, where people rely on a lot of large debt, that is going to be quite difficult for them. I think Bank of Ireland also, Innie, this morning has stressed that it wasn't a cyber attack, because that could be very, very serious, and that could cause a significant security threat to Ireland as well as the United Kingdom's economy, but it doesn't appear as if it's that way just yet.
All right, we'll be waiting to get when they arrest them or when they get back the money. But there's also this development where NHS workers are getting office building and holiday lodges converted. Why has it gotten to this?
Well, this is an isolated story, actually, and it's a story about a family-run I suppose we could call it a kind of staycation centre called Kilo House in Cornwall, which is just in the kind of leafy southwest of England. They have asked their local council for planning permission so they can transform their land into lodges for NHS staff, and there doesn't appear to be any other reason than the fact that they want to assist them because of the cost of living crisis, bearing in mind there is still significant industrial action. There are still some nurses up and down the country that are still saying they need to go to food banks so they can eat when they finish a 12-hour shift. So I think this family-run family cottage area called Kilo House, they are just offering their support so that NHS staff working in their area can have somewhere to stay in the winter. So yeah, this is a heartwarming story, but isolated in its case.
All right, it's good to know. At least some people still think without adding the money factor into it. So it sounds really good and heartwarming, as you said. Thank you so much, Julian. I will see you at 1:30.
Thank you. See you at 1:30.
All right, but we can tell you that the crypto market is not heartwarming at this time. When we take a look at the graph there, it's not good at all. We see that Bitcoin is bleeding the market even more. Well, not just Bitcoin. It's down 1.58% at 28,000. I mean, we had 29 and we're complaining. Now we have 28,000, 28,644. Ethereum is even worse, 1.15%, and lost that 800 here. It used to be 1,800, now 1,799. Well, you could say it's a good time to jump on the market, but it looks so sad here. All red. The market is bleeding, and the index is back to 50, just going between 50 and 52, 53, but obviously not a good one. Well, we have Rume Ofi now joining us. Maybe he has an idea what's bleeding the market. Hi, Rume. Good morning.
Good morning, Ini. Good morning.
Yeah,
good morning, Ini.
Yeah, good morning. We're complaining that Bitcoin was at 29, now it's gone to 28.
Yes, this is the 17th time that stablecoins volume is going low, and you know the very significant role that stablecoins are playing in this industry. For a while now, we've been calling on a lot of people to be very careful in this market, that the macro is not supporting some of this movement. There's not enough volume, but a lot of people felt that, oh, I just been the bear, blah, blah, blah. But the truth is, with all of these ideas that the Fed is going to continue hiking because of all of the things happening in the U.S. economy, which are also going to cascade to emerging economy, is going to be showtime. Please be very careful. And this is just the tip of the iceberg, just showing in the Bitcoin market now, because people are going to obviously prioritize, and they're not going to put their money in riskier assets. Riskier assets are going to be seeing some really good downside when the DXY is getting stronger, which means the dollar is getting stronger. People are going to be leaving, you know. So a couple of things are also happening in the market. You see, yesterday, earlier this week, the European Bitcoin spot ETF was listed, and as well as Coinbase also got a green light for the U.S. citizens to start trading futures, you know, and a couple of things. PayPal as well and Ledger had this collaboration. A couple of things happening in the market, but it's not enough to say, oh, these are the lows. A couple of lows are coming, opportunity to get in to get the very best of the best. But one thing I like to advise people, young people most especially, is to get the knowledge. This is the best time to start studying. When the markets are low is when you start getting knowledge. Go and learn all the skills that are involved in this industry. The blockchain industry is quite new. Jump on it. We always complain there are no jobs in Nigeria, but if you ask me, this is an emerging economy, and this is the very, very first time that Nigerians need to jump on this and get the best of it to be one of the great guys in this field.
Sorry, Rume, just briefly now, you sound so optimistic that the markets will recover.
Yes, the market is going to recover, but not now. We should be looking at late 2024, early 2025, but now we should brace up to learn how to breathe underwater. What I mean is,
that's so scary.
Get all the skills, educate yourself. The importance of knowledge cannot be overemphasized.
Okay, all right. So we look forward to next year then. We'll keep brazing on the water. Romeo, a financial market analyst, thank you so much for your time.
Thank you very much, Ini.
All right, just before we go, let's look at the top gainers and the top losers right there. There you have them. Not very interesting numbers there. I mean, gaining less than 1%, 0.45, 0.39. Let's see the top losers for this morning. There you have it. This is where the activity is. A lot of profit-taking sell-offs. That's why we have more of double digits right there. So that's how the market is looking. But Rumi, I said we should learn how to stay under, learn how to learn how to abase and abound. So this is the time to abase until next year. I hope we can survive it. But that's it on the program today. Thank you so much for being a part of Business Morning. It's a final one tomorrow. We have a lot of conversation for you. You don't want to miss it. Willie Bong will be back at 1:30 to give you updates from the world of business. I'll see you at 10 p.m. I hope and hope and hope that I'll be reporting a bull market today. That's just a hope. Investors have the final say. Have a good day. I'm Ini John Mekwa.